Hey guys, welcome back to the channel. In tonight's video, we're going to talk about some life insurance. Ooh boy, good old fun life insurance, okay? We're going to talk about what life insurance is, what are the benefits, some different types and different scenarios that you might see in the insurance world. And believe it or not, I am a licensed life insurance agent in the state of Louisiana and Texas. So this is something that I actually do like to talk about a little bit and have talked about with people the last couple of days, checking on some different policies and stuff like that for some clients. So anyway, guys, I wanted to make this video because this is an important part of being financially literate. This is something that I believe most people should have, depending on their situation. So we're going to go ahead and dive right on into it. All right, guys, so what in the world is life insurance? Well, by definition, life insurance is a contract between an insurance policy holder and an insurer or assurer, where the insurer promises to pay a designated beneficiary a sum of money upon the death of an insured person. So, easier put, it's basically insurance on your life, and you pay an insurance company money every single month to basically insure you. And if you pass away, then they pay out a lump sum death benefit to whoever you're leaving the money behind to. So, for example, for myself, if I take a policy out of myself for $50,000 and I leave my brother Joe Blow as the beneficiary, then whenever I pass away, if Joe Blow is still alive, then the company will pay that money to him for $50,000, and it's actually tax free. Okay, you don't have to pay taxes on that. Now, if for some reason Joe Blow, my brother Joe Blow, passes away before I do, there's something called a contingent beneficiary, which is kind of like the second person in line that you can have on your policy as well, where, oh, Joe Blow's not there. Well, Jim Bob over here was the contingent beneficiary, so Joe Blow gets knocked off. Jim Bob is the next guy in line to receive my death benefit. All right, guys, so the importance of life insurance, basically it leaves you and your family with peace of mind if something were to happen to you. It's a shame that it does come down to this, but it always comes down to money, right? It's money is such a big and important aspect of life. So you want to make sure that the people that you love are left behind with something to make them financially stable and not have to worry about really anything, because whenever you lose a loved one, it's already stressful enough as it is. The last thing you want to worry about is money. Okay, it can help pay for burial and other type of expenses. You can maybe factor it into where you pay off your house, you pay off these types of debts. Maybe you want to leave some money for your spouse or whoever for children's education, things of that nature. But it'll help with all those types of expenses. And obviously, it'll replace someone's income. So if two people are married and the primary breadwinner passes away, obviously when that person dies, you can't replace that person. But luckily, you could actually replace that income. So you can kind of factor in, if this person were to die tomorrow, how many years would I want to provide for my spouse if I were not around? And you could just calculate that very, very easily and factor that into a life insurance policy to leave that behind for your spouse. All right, guys, so the types, okay, and there's a lot of different types of these, but just kind of in general, these are like the two basic types. All right, you have term insurance and you have whole life insurance. So term insurance is basically pretty cut and dry, exactly what it sounds like. It's for a specific term. Okay, so I can buy a 5-year term, a 10, 15, 20, 25, 30, 35. It's a term, but at the end of that term, at the end of that contract, that's basically it, and we'll go over some scenarios on that as well. Whole life is a little bit different. Whole life is basically, it's going to be carried on basically throughout the extension of your whole life. Okay, so we're going to look at term life and kind of go over an example of that. Okay, guys, so over here, if you want to focus on the left, this is 2021. This is someone here, age 30, okay, that decides that they want to get a 30-year term life insurance policy. So they purchase that through a company, and they pay a monthly premium for that for 30 years. And over 30 years, they get older, their premiums stay the same, all good. And then at the end of those 30 years in 2051, here's what happens, okay? Obviously, one thing happened if he's still living or she's still living, they got older, they got 30 years older. So they have the option to renew the policy, but as you get older, your insurance gets more expensive as far as life insurance because now you are at a higher risk of passing away because you're older, right? You're getting closer to the end of your life. Okay, so they can renew their policy at a higher premium, or they can just opt to say, I'm not going to have insurance. And some people are lucky enough to do that if they invest and they're wealthy and they have a lot of other type of investments. They can have basically self-insurance. They can have enough money to basically provide for their families if they were to go away. Maybe that he took out like a $300,000 insurance policy for 30 years, but he did really good on some investments and actually has $300,000 in a whole separate account to where he said, you know what, I don't need the policy anymore because I'm self-insured. This is outside of my retirement. This is outside of anything else. This is an additional lump sum that I have to protect my family and pass on to them if I pass away. The benefits of term life insurance, typically it's usually cheaper. It's a lot easier to understand, and I'll show you why in a second. And you also may not need, but only for a certain period of time anyway, right? So you only, if you plan well, some people are lucky enough to where they can be self-insured and they may not need insurance for the duration of their entire life. Okay, guys, the next one we're going to talk about is whole life. Okay, and the benefits of whole life insurance is exactly what it sounds like. You have insurance for the entirety of your life, or until some policies, I think, until like age 95 or age 100, and then eventually the policy will cancel out just because the chances of someone living that long is basically not likely, right? So the whole life policy, like I said, is you're having it for your whole life. So this person buys a whole life policy and they pay monthly premiums. But the difference in this is you're not just paying for premiums, okay? That your money that you send in every month is going, some of it's going to the insurance company as a premium. The other portion of that is going into an account called a cash value account. All right. Now what they do is a lot of people sell it as it's it's kind of like a rainy day fund for you and all this type of stuff, which typically makes this a little bit more expensive because what you're doing is you're paying for insurance, you're paying for a cash value policy. Okay. The good thing is you have some money kind of stashed away, right? The bad thing is if you need to take some cash value out of this account, you can, but you basically have to borrow it as a loan from yourself, which kind of makes not a whole lot of sense, being at the fact that it's your money. Okay. So we'll go over to the next slide here and we'll talk a little bit about that. So let's say over time, all right, you've accumulated a lot of money in this cash value. Let's say for 30 or 40 years, you've kept paying the premiums, and part of the premiums are going into this bucket, and it keeps getting filled with cash, and it keeps growing and growing and growing. And then all of a sudden, okay, you pass away. Well, this is the insurance contract over here. Let's say the insurance contract is $50,000 and you've accumulated about $50,000 in your cash value account. Well, what will happen is the insurance company will honor this contract. They'll pay your beneficiary the $50,000. However, you will not be entitled to this cash value account. Okay, so the insurance companies in a lot of situations will keep this money if you pass away prior to the maturity of the cash value account, which kind of stinks because it's your money. You've been putting it away forever. So why would they keep it? Why wouldn't they honor it and give it over to the beneficiary as well? And there may be some other type of whole life products that maybe allow you to have a little bit more access to the cash value or whatnot. But I know that just the basic whole life, this is kind of how it works, and it's kind of crappy. Okay, so what you could do if you do have a whole life policy is do a whole life switcheroo. All right, so basically if you have an active whole life policy, and let's say just hypothetically you have $5,000 set aside in that cash value account, you could find a quote and get some term insurance, possibly get more coverage for less money. All right, and then what you can do is you can terminate that whole life policy and you'll immediately have access to the cash value. Okay, they'll send you a check for that 5,000 you have in your cash value account, because you do have every entitlement to it, okay, because you're still living and you've been putting it away. And then what you can do is you can take that cash value that you have, you can roll it into an IRA, an index, or mutual fund, and then purchase that term insurance for cheaper and begin to kind of invest the difference. So, like, let's say you save $50 a month on your insurance, and you got more coverage for less money. You put the cash value into some type of mutual fund or index fund. You can take that $50 and start rolling it into the mutual fund or the index fund and start growing it yourself. And then you could actually leave a beneficiary on the index fund, on the mutual fund, or the IRA. That way, whenever you pass away, your loved ones get the life insurance as well as that retirement account that you've created and you've created and left the beneficiary for. So anyway, guys, I just wanted to make a video educating you on what life insurance was, what's the importance of it, and some different basic types of insurance that you might see out there in the industry. I know a lot of people kind of look at this and life insurance. I had some people tell me it's a scam. I can personally say that I've had some family members pass away, and we've been lucky that they had this in place, because it helped tremendously with burial, it helped tremendously with paying off debts, and just kind of creating some type of rainy day funds for their loved ones, because um, you just never know what could happen, and it's kind of, like I said, leaves your family with peace of mind. Okay, and that's the worst part about insurance, is you don't know if you'll ever use it. You don't never know if you need to use it or not. But it's always just kind of like, just in case, just same reason why you purchase home insurance or auto insurance, just in case something happens, you get some coverage to fix those things. So anyway, I want to thank you guys for watching. Make sure that you like the video if you got something out of it. Subscribe to the channel if you enjoy our content. And also, guys, check in the description below. I have some links to some really good books that I've enjoyed reading in the past. I think you guys may like as well. And other than that, guys, we will catch you in the next video.